Hello everyone and welcome to Crypto Ripto. I'm Christian and in today's video we are going to go through part 3 of how to make money in crypto 2022. Hopefully by now you would have watched part 1 and part 2, which gave you the intro in how I do my strategy, a more in-depth dive of how I do it and what I look for and where I go to all important final information. And finally today we are going to go over what we do once we get into the close stages where we need to exit out of our positions. Because obviously in crypto, when we've got the long positions, when them tokens and coins are pumping, we want to take profits in order to keep our portfolio bolstered and looking great. Now, this is not necessarily to say that the crypto market is going into a bear market and we've got to take all the profits. This is just looking at entry points of when a token or coins. Hello everyone and welcome. So before I go into today's final part of how to make money in 2022 in crypto, I have to say that anything you see, hear or choose to ignore is not financial advice. Yes, it's that time again that this is here for your educational purpose only. So without waffle out of the way, today we're going to go through the final part of how to make the money and how to exit the strategy when you think the bear market or the retracement in the token or investment that you're invested in is on the horizon. Now you would have hopefully seen part 1 and part 2 now about how I look to spread the portfolio, how I look at projects and how I want to get into them, how I get into them projects and how I see growth over the slow period of 50%, the riskier period of 25% and the stable coins of 25% where I buy the dip. But say my 50% portfolio or the tokens I've looked at are pumping. So I've got 5 tokens, Bitcoin, Ethereum, Cardano and 2 main shite tokens, Dogecoin and Shiba Inu. Now, Bitcoin started pumping, so I'm looking to start exiting this token. But how or when do I do it? I don't look at what people are doing on YouTube. I don't look at all the FUD and the shillers and sellers on Twitter to say that Bitcoin's going to be 100,000, you know, with the laser eyes that what happened when Bitcoin hit over 60 last time and then it crashed and everyone got caught out. I look at what the price is telling me in the charts, be this on TradingView free account or be this on coin. So say I bought Bitcoin at 30,000, which is what happened when it went in the dip. So I bought Bitcoin at 30,000. My price target was, I think Bitcoin's going to hit 70,000. Well, it didn't. But that didn't matter to me that it didn't hit 70,000 because my strategy was that when it hit 60,000, I had doubled my money. So therefore, if I bought one Bitcoin at 30,000, that Bitcoin now is worth double the money. So I could afford to take 30,000 out and any money that's in that Bitcoin is the house's money. And this is how I like to do my strategy. So I started averaging out the profits from 60,000. And I chose to do this over a daily period where I thought I need 100% of my money out. So I'm going to do 10% each day until either A, I've got all my money out, or B, the market starts to retrace. And if the market started to retrace, I'll stop the dollar cost averaging out for it to find support and then either buy the dip or leave my money in there for it to go on to its next parabolic move. And this is exactly what happened with Bitcoin. And you can see this in the charts. Now I'm going to just quickly go into the Bitcoin chart and show you. Boom. So as you can see here, I've got the Bitcoin chart up and I've already put the lines in there just to save a bit of time on it. But this is going to explain to you what I mean about dollar cost averaging out and where I sort of put my price targets. So I'm just using Bitcoin as an example, but you can do this with every other token. I did this with Cardano and I did this with a token called VRA and they worked absolutely perfectly for me. So like I said, I brought Bitcoin, well, I brought 2 Bitcoins actually down here at 30,000 and I knew that pretty much 30,000 was the bottom because of all this price chart action around here. Now you can do your own research yourself, but you can pretty much take a front run that this was going to be the bottom and put your price targets in there. I think I got mine just over 30,000. I think it's about 30,500 with a few exchanges, fees, etc. But I won't go into that granular detail. And then as you can see, Bitcoin took a pump up, which a lot of these tokens do in a bull run. But my price target was, and I was genuinely believed that Bitcoin was going to go to 70,000 because of how the charting was. I thought it was going to reach a new all-time, and the last one was 65,000. So I thought, right, it'll do 5,000 more than that. And a lot of what the analytics were saying, and a lot of other people that do the charting in the industry. So that's just how I got that figure. But this was pumping up, and then it went sideways for a bit and then went down. So I did have a rocky road all the way up to before I got to the 60,000. And this is crypto. You'll find this with a lot of tokens, and this is where you have to keep your emotion. It won't just bang, I buy at 30, I'm straight up to 60, a dollar cost average out, I'm the next crypto millionaire. That's not how it. Crypto goes up, down, round and round, and side to side, and it will play on your emotions. And as you can see in the chart here, that's exactly what Bitcoin did. So it shot up, went sideways, and then shot up, and bang, it hit my 60,000 threshold. So once it did that, my alert triggers on TradingView on my mobile phone are all pinging off like it's the 4th of July. So bang, once I got that information in there, I then setting up sell orders because I wanted to sell percentage of my crypto over 6 days. I thought the crypto market is going to sort of go up over the next steadily over the next week, but I wanted to front run it by 1 day, maybe 2 days. So I thought 6 days was just a figure I pulled out of my head, or whatever you want to call it. So I just divided 100 by 6, and that was the percentage that I wanted to sell each day. Now I think that comes out to around 1660 odd, so I just rounded it up to 17%. So I set sell orders up of 17% every day. So I'm selling at 60,000, 17%. You can see here the next day, the 17th, it's around about a similar price. I'm selling again. On the 18th, we start going up. So then I'm selling for a bit more money. I won't go into granular, but as you can see, over the 6 days, it went all the way up to about $67,000. And that to me was absolutely amazing because yes, it did crash after that, but never below the 60,000. And it did go higher to almost 70. And I didn't sell at the peak because obviously I started selling at 60. And you think, well, why? You've missed out 10,000 here. Why didn't you just sell at 70? Because as you can see from the crash here, that was never guaranteed. You know, I just wanted to stick to my price target, not differentiate away from a strategy. And this worked out well because I actually sold in a good area. Yes, we got a little bit more here, but that was okay with me because see, everything was above here was a bonus. I'd already doubled my money here, so I'd already doubled it. So I knew I was getting 60,000 and above for tokens that I'd already kind of paid 60,000 for, and I still had my original investment in the market itself. And then obviously it went up, and I thought, okay, this is going to continue going up. I need a bigger retracement before I start buying back in. And then what happened? It got rejected, and bang, it fell all the way down to 41. But did that worry me? No, because I was covered. And this is what you should do with every other token. Now, yes, there's going to be tokens that then hit a resistance threshold and start going up a little bit more, but that doesn't matter because you're not trying to, you know, roll the trend of the market. You're trying to outsmart the market and outperform. And if you're investing something on a 20th of July and you're making double your money by the 16th of October, trust me, you are in the top fucking 10-20% of all-time great traders, because big traders on the market celebrate and rub each other's dicks when they outperform the market by things like 11 to 13%. So you doing 100% means you can genuinely go to the mirror, go to your nan, your gran, your girlfriend and high five yourself. So this is what I mean by dollar cost averaging out and setting your strategy. So this is just on profit taking. So how do you know how to do this when, say, the market is getting to a stage where you think, is the bull or bear market going to end? Well, the reason I look at this is when everyone, and this has been categorically sort of proven from 27, is talking about crypto that don't even know about crypto, and the, you know, the news is putting crypto on the market every single day, and your big top 10, 20, 30 altcoins are seeing double digit green candles and green percentages every day for 3 or 4 days straight, and you're layering them profits in again into the lower ones on the strategy I said, and then they're seeing 10, 20, 30% gains for 3 or 4 days straight. You know that the pinnacle of the bear market is about to hit, because this is what's called a blow off top. And when we get the blow off tops, that's when we see super alt season. You make your 5-10x gains, become crypto god of your kind of industry. That's when I sort of see the euphoric, when the market's in super greed. The blow off tops are coming with the 10-20 parabolic kind of pumps on everything, not just one or two tokens that whales manipulating or everyone's seeing flare a month. When your whole portfolio looks like it's on pure crack steroids or whatever and is pumping to the moon, that's when you know that everyone's throwing in the last roll, the last chips of the dollar. Everyone's all in and everyone's trying to compete the market. Now that is when it's more important to do this dollar cost averaging out. You get your price targets for them parabolic moves. You're seeing a 5, a 6x gain, and then you think, okay, this parabolic move is going to last probably what, anywhere between 5-10 days, 15 if we're really lucky. You've got to be dollar cost averaging out everything you own, the kitchen sink and everything, in my opinion. Unless you want to be really caught out, you start dollar cost averaging out everything that's, and it starts with a waterfall effect. It starts with the top 10, 20, 30, 40, 50, maybe 100 tokens. Once the money's boring that, everyone's in the next gold rush to get into the lower alt caps to make more. And then the market caps beneath that, everyone's pumping to the gradually, like a Ponzi pyramid, multi-layer marketing, whatever you want to call it. Once all that shit's filtered down, the ones that didn't cash out or believing it's not a bear market at the bottom are the ones left holding the can, holding the tears, while you're out there living like Wolf of Wall Street or everyone's best mate thing. And that's when you can generally say, when's Lambo? Although for me, I would just be looking to invest it in the bear run, but that's up to you. So I know that's a lot to take in, so maybe pause this video, look at the notes. I will, and I've just decided to do this, I will do a bonus video with just a quick recap of some of my notes, bullet points of the video. So I'll just literally have the bullet points of the notes up. I'll read through them, recap them again, maybe towards the end of this week. It'll just be a quick video to go through all this little strategy stuff that I'm doing, just so you can see it in probably a 5-10 minute video of the part 1 key bullet points, part 2 key bullet points, and part 3 key bullet points, exit strategy, etc. Do look at these videos again, like, subscribe, tickle that bell notification, but control your emotion, stick to a strategy,